Hey everyone, I'm Charting Man Dan, trader for the last 14 years using technical analysis. We're going to check in on the broader market after the NASDAQ and the semiconductors led the way down today. There was some very meaningful rotation on the morning, but we are in consolidation mode in some of our major sectors. Let's see how we're shaping up as we look to NVDA earnings on Wednesday. So we had the S&P 500 start daily consolidation with the NASDAQ on Thursday, zero follow through and up to new bounce highs. Clearly not seeing any follow through on those new bounce highs, but also clearly not seeing any significant consolidation. And the reason for that is picture perfect rotation where we see QQQ and SMH leading the way down. And while it's doing so, XLF and XLV keep hitting new highs, new all-time highs. And so that's going to offset any meaningful consolidation in the broader market, and that's rotation taking place. So we're watching the all-time high, which is in play, and right now the S&P 500 would need to break the low of last Thursday, for us to see clear weekly consolidation shaping up. The question we have this week, again with NVDA earnings Wednesday, no trading next Monday with the holiday, are we setting weekly lower highs, or are bulls keeping complete short-term control? And the answer is it depends on what you're looking at. So the S&P 500 is getting tug of war going on as these two sides are pulling in different directions. The NASDAQ is the opposite. You see S&P 500 is grinding up with a new bounce high today. Again, no follow through, but the NASDAQ is grinding down with a new bounce or a new consolidation low today. So they definitely look different in that regard. We have to keep in mind from where we're coming from, depending on where you pull the retracements. Look at how much we can pull back and still be a potential bull flag. I mean, we could drop down a 382 retracement and still be that potential bull flag. Even if you're pulling from the higher low, we still have a ton of space to work with. So there's no major red flags on the consolidation at this point. Best case scenario. So I laid this out on Thursday. And Thursday I grabbed a paired trade, essentially long XLF and short NASDAQ because I saw the rotation shaping up. And again, I'm always laying out, if I'm a bull, what's the most ideal scenario? If I'm a bear, what's the most ideal scenario? So Thursday, I said if XLF at that point in time was testing the high and it was battling 44. So here's Thursday, just really battling this 44 bounce high. Bulls know daily consolidation is inevitable in SPY and QQQ. We have a daily stair step of weeks in a row. We know we got to pull back on the daily. It would be a big sign to me for their continued control if XLF breaks to an all-time high. This was a cup and handle type of pattern. All-time high was a triple top essentially, and this was a bull flag. So if XLF confirms a daily bull flag right when SMH and QQQ start their daily consolidation, that is best case scenario rotation taking place in the market. And it's a top watch for me to end last week. So I do this because I lay out what would be ideal for bears, all major sectors hitting the lows together, and what would be ideal for bulls, that scenario. And then I observe which is shaping up. And so I see that, and so I enter FAS long the financial sector and stick to shorting the NASDAQ. And that worked really well on last Thursday. Friday, NASDAQ bounced significantly as XLF confirmed the daily bull flag to new all-time highs. And then today, again, that paired trade, which I still have swing positions in, perfect, with QQQ down 1%, 1.5% on the day, and XLF was up 1%, just under 1% on the day, closed down a little bit. I'm taking profit in XLF now. And the reason I'm taking profit is because we've got multiple gap ups in a row. We've got the weekly straight V-shaped bounce. I know weekly consolidation will be inevitable. And again, I'm watching for the rotation back. I'm looking at the healthcare sector, and I'm saying, okay, we have seen a new all-time high in XLV, 8 of the last 9 trading days. We know daily consolidation is inevitable here. I'm saying the same thing, just with different names. We know daily consolidation is inevitable. In an ideal world, XLV starts daily consolidation. XLF may join it. They're on the same side with how often they do the same thing with NASDAQ and semiconductors over here. So if they start daily consolidation and the NASDAQ and semiconductors set daily higher lows, that will again be the ideal rotation and taking place, the inevitable consolidation we know has to happen on a name that looks like this. What's going on elsewhere when that inevitable consolidation takes place? Semiconductors led the way down with the NASDAQ today, so broke the Thursday lows, just like QQQ. And this bounce is much weaker. Again, there are names like SMH where we know a weekly lower high is absolutely the most likely scenario. And it's technically been set now. The real question is going to be what's NVDA earnings reaction. But you have names that are doing this on 40, 50% bounce retracement. And then you've got names like SPY, 90% plus bounce retracement. There's still a lot of weekly lower highs, most likely in many places out there. NVDA earnings are either going to have us daily bull flag to testing all-time highs or clearly setting that weekly lower high for consolidation. So the most important thing for me this week from here, which direction does NVDA react to earnings? Tesla. So Tesla started the morning and looked at this and said, there's a setup there for bears. Just essentially saw this drop and this bounce. And so pre-market, wouldn't be surprising to set that lower high and pull back. And then after the dump, I was looking for a higher low compared to 210 to continue tightening up. The bounce was weak, took some profit to be able to stick a break-even stop around that. At that point, I used 211. Just want to highlight here, this ended up being an uneventful trade. I exited for 15% day maker win, nothing. But I used the low of the day is 211.50. Normally, I would use 211.39 as my stop. But 39 cents on a $211 instrument meant nothing to me on this trade. It was the difference between making 15% of a day maker or losing 5% of a day loser. Just insignificant either way. So I use the low and then I use the psychological level below it. And so my stop was 210.99. And I placed that stop there, as that bounce was taking place here. And then I missed stopping out by 2 pennies. And then I salvaged, I wasn't going to swing this position. We needed to close much stronger over the bounce high if I was going to consider swinging it for the 4-hour equilibrium to try and continue tightening up into tomorrow. And that still may take place, but I didn't have enough conviction on the bounce attempt to give it a shot. But the point is, use those psychological levels. The fact that there was a solid amount of bid support at 211 on the dot, nice round number, kept me in the trade. Most of the times it won't keep you in the trade. It's not that significant, but there are a few handful of times where it does matter. And that went from being a small loss to a small win. XLV, as I mentioned, going to be watching for daily consolidation. The only nearby support on the daily chart that matters is 153.99. There's a little gap at 153.94. But tons of space for a daily higher low, tons of space for a weekly higher low. Watching for the response to first hourly oversold conditions if we get there. XLF, again, trimming down my swing position the last 2 days. At this point, it's a fairly insignificant position size, but we'll leave a runner. And then we'll watch for a weekly higher low here eventually. So again, it's just the number 2 and number 3 most important sector in the S&P 500 hitting all-time highs the last 2 days in a row here for both of them hitting all-time highs, while SMH and QQQ were pulling back. Ideal way for the market to consolidate for bulls. Ideal way for bears, XLF, XLV, QQQ, SMH all hitting the lows at the same time. Came close today, but QQQ bulls defended the low. IWM getting a bit of rotation the last couple of days. I've been watching IWM a lot more the last couple of months, first looking for this rotation. And it's very clear that the fundamental events are what lead to the big moves. It's the FOMC, it's the CPI reactions, it's the Fed. What was it on Friday? I forget. Some pre-market. It's data that is leading to IWM getting bull action. But it was a laggard weak bounce and it's playing some catch up here. Again, entirely possible we set a weekly lower high, but with this bounce retracement, and again, make sure you watch that sucker punch video that I did to end last week, Google Chart Guys Sucker Punch. Watching if that weekly lower high is shaping up. Have to lose the daily uptrend. We've got space for a daily higher low. So burden on bears to set weekly lower highs in many of these sectors. The dollar is weak, but we just broke monthly support and we are weekly oversold, and we go back historically, and what's the weekly RSI do when it gets down to 30? It doesn't stay there long. If we look at the last decade, we can pick a couple times where we stayed oversold for a few weeks. So wouldn't be surprising if we get a weekly bounce from here. But we are in a daily and a weekly downtrend. So bulls have to prove it one time frame at a time. And overall, this monthly bear break definitely stands out to us. We did get to the lowest level in 14 months. And bears would love to get to the lowest level in multiple years. But with that, we got gold and silver still hanging on strong. Gold, we got daily EMA 12 as a guide. If you want more wiggle room, it's weekly EMA 12. Just grinding up the all-time highs. Tested today and failed. But bulls keep full control as long as 2470 is support. Silver's trying to act as a laggard to gold. Recently here, you can see we already confirmed the daily higher high. But we're still not breaking out on the weekly like gold is. So gold led the way. Silver's trying to follow along. Silver was a beautiful back test to previous resistance, now support. And we will eventually need the weekly uptrend, but we're creating the space for it. Every bull move up we see from here. Miners as well. GDX. If this bull flag fails, probabilities for weekly consolidation will increase significantly. Oil getting real tight. Another bounce off support. So hold support by $1. Hold support by just under $1. It's all about 79 resistance. Aggressive bears that are hoping this long-term equilibrium breaks bearish are going to look to top fish 79 with some wiggle room. Otherwise, patient traders just waiting for this tightening range to break to lead to volatility in oil and to lead to volatility in the energy sector XLE as well. You can see XLE already broke that little bounce high. Oil not yet. But we can say that in an ideal world, I'd like to see one more lower high, keep tightening up into next week. Always want to see those patterns. If you don't have a position, you always want to see those patterns get as tight as possible before they break to have more conviction in follow through. So overall, I'm taking it easy this week. Going to be heading back out to do some hiking, see some music, and just observing swing trade perspective for the open positions that I have and broader market. Is this healthy or is this not? And so far, everything's been telling me it's healthy. That can shift in a day, as we know, but we know that the only way it shifts is with all major sectors hitting the lows at the same time. It's possible some names set weekly lower highs and other names don't. If this rotation continues, at one point today, what I'm watching is XLF divided by QQQ. Look at this weekly chart. Are we about to confirm a weekly uptrend and get to the longest, I should say the most significant relative strength that XLF has seen compared to QQQ in a year and a half? I mean, that's on the table as a possibility. And IWM divided by QQQ, very similar setup. Trying to shape up a weekly uptrend. So that's what I'm watching for, that kind of rotation, which would be a broadening of the market if that were to continue. But one day at a time, as always. We will not see any significant weakness in the market as a whole, as long as all of our major sectors are not hitting lows at the same time. But there's still opportunity in the short-term moves for the bears. NVDA rolled over real hard today. So all depends on your time frame and what you're looking for. And I know that I personally have swing trades favoring longs, but definitely have hedges on now with the daily consolidation beginning and stops over the highs on those positions. And then just day trading, doesn't matter what direction, long or short. Thursday was a real good short day. And just being real patient, just observing and waiting for the market to tell me anything's shifting, or if not, all-time highs coming in both NASDAQ and S&P 500. Burden is on bears to prove to me that that's not happening, because as of right now, that V-shaped bounce is happening. So very open to shifting. Again, tomorrow, if you give me all major sectors hitting the lows of the day and a minus 1.5% day on the S&P 500, my tune shifts very significantly. But staying agile and unattached to a direction, I am attached to a direction. It's long unless proven otherwise. But open. I'm open. I'm not long no matter what. Just show me, bears. Give me the reason. Do good things. Hope you're well. Some more Oregon clips here. Do good things. See you soon.
just got way too close to that rattlesnake. Right in the middle of the trail.